Hi, this is Jeffrey Cohen. How are you today? It's Tuesday, July 5th. We're here to talk about the markets. And to start it off, we are not sure where the markets are going today. There is a lot of confusion and mixed messages out there. And in fact, the futures have changed a lot since we looked last night. And so I would say this is a market it's a thin market with a lot less liquidity and a lot fewer market participants than maybe we would have expected. Um, there's been news, but generally it's just kind of negative news and not that interesting. So I'm going to walk you through some of the notes that I took. So I was prepping this morning, and let's see how we did. So the first thing we notice is the US dollar has been climbing, right? So other currencies are falling compared to the US dollar. The Indian rupee hit a new record low. I actually don't know how many rupees it is per dollar at this point. The euro dollar, when we looked, hit under 103. So you'd expect to see like 105, 106, 107. We're seeing 103. That's heavy. That's heavy. That you can almost hit parity at this point. That's not normal, right? So euro dollar very, very low, which means dollar is very strong against Europe. The Canadian dollar has fallen against the US dollar, and the Japanese yen continues to be at fairly historic lows against the US dollar. I'm guessing if we checked others, Mexico, China, you'll see the similar things. US equity futures are down, but they were up last night. So if we take a look at where we are on the equity futures, the Dow's down 0.6%. It's interesting is the S&P 500 is kissing 3,800, right? So support is around 3,650. So it's still got ways to fall to really fall. This could just be an intraday kind of a thing. Nasdaq at 11.5. It's down almost 1%. Russell 1,700 down almost 1%. Interesting, the Nikkei was down. Europe is down a lot. So part of it is the euro is down. European stocks are down. People are concerned. What's always interesting then is the bonds. So when we looked earlier, U.S. Treasury bonds and notes, so 30-year bonds, 2, 5, and 10-year notes were down slightly. In fact, this morning they're up slightly except for the 2-year. So that would mean that the yields are falling, price is going up, but for the 10-year note, the yield is rising. So that's an inversion. We're moving towards an inverted yield curve. So that's important because inverted yield curves happen during a recession. I just don't know if they cause a recession or they're the effect of trades made based on recession trades. Just don't know yet. So a couple other things we noticed. Copper, look at that. For 3 months, copper continues to fall. Bit of a free fall, down 11 cents. So remember, copper's trades normally around $2. It hit 4.50, $5 almost. It's coming back down. So copper falling is a recession play. Copper down. What else did we notice? Gold and silver were slightly up. Gold is now down slightly. Silver's flat. It's interesting because silver is a little bit of an economy play. Gold is just a gold play. It's pretty much completely independent. Although gold does have a negative beta with stocks. So when gold goes down, you kind of don't know, but stocks may go up. So it's a little bit of a contrarian play. We had noted this before. Crude oil down 0.5%. Brent, so European crude is down 1.5%. Gasoline down, heating oil down, natural gas down. But ethanol, of course, up because we're gonna burn more corn and less oil, because we're gonna make America great again with not having oil. Wait, that's the wrong president. I'm sorry, but you can see it, right? red futures. Red futures. A lot of articles about recession. It doesn't even matter what the article says, but they show pictures of guys rubbing their head. Looks like he just had a few at lunch. Crypto is below support, right? Support is 20,000, although it fluctuates slightly. The euro is down. See that the euro is down to 102.93. Bitcoin is down. We do like to always check the futures. Again, not a lot of story here. Just it's a red day in the markets. Down now. It looks like it's down about 1%, 3/4 or 2/3 to 1%. Longer term treasuries are up very, very slightly. I don't know. Not that exciting. There was nothing in the tweet deck that made me have any sense of anything going on. This is always interesting. This was Friday's trade. So Friday, 10-1 new lows to new highs on corporate bonds, even though the stock market went up a little bit. We also noticed on FinViz that you had 29 new highs and 552 new lows. So that's about 28-1 new lows to new highs. So it's still breadth-wise a down market. Although the headline is that advancers beat decliners 4-1 on corporate bonds, behind the scenes you see breadth is down. And agency debt, which is a lot of mortgage-backed, flat. 21 up, 21 down. Advancers beat decliners 5-1. So headline numbers look good on bonds, but still new corporate bonds, more new lows than new highs, 10-1. That number was like 29-1 when we last looked. So breadth slightly improving. So what does that tell us? It tells us that the market is punishing companies that have risk on their balance sheet. Risk on the balance sheet will lead to stock prices falling, because risk on the balance sheet is leading to bonds falling, and eventually kind of bonds move first, stocks move second. So, you can see the breadth here, even on an up day when the markets were up 1% and the bulls were beating the bears all afternoon, you still had 552 new lows and 29 new highs. So one of the things we did is we took a look at this chart and we did a time series on it. And I want to do that for you because I think it's important. S&P 500, one-day performance, you see pretty green, not bad, but just semiconductors were down and computers were down. So very hardcore tech was down, physical tech. So that didn't make any sense to me, but just is what it is. I mean, we look over the week, and over the week you see all tech, for the most part, down. Banking is down. Industrials are down. But then you have some sectors over a week that look pretty good. Energy looks good. Utilities look good. Aerospace and defense. Healthcare plans. Some of the consumer defensives look good. Telco and entertainment. So that's over a week. We look over a month. Different sectors. Now you have all tech blood red. Banking and financial services very red, with the exception of insurance and financial data providers. Now, consumer defensive look okay. Energy has crashed over a month. Basic materials, most utilities, railroads, specialty equipment, industrial products, farming, medical devices. So, but your healthcare looks good. Healthcare, hey, if you like your healthcare plan, you can keep your healthcare plan. That's great. So what this says is over a month, we've moved to a shift. Aerospace and defense, consumer defensive, some telcos that don't move, healthcare plans. Over 3 months, truly a red market in financial services. True tech, comms, consumer cyclical, consumer defensive for the most part. So that's 3 months. And over 6 months, energy stands out as having done great. Now, it makes sense energy would do great over 6 months and probably even over a year. Because energy and healthcare with the COVID thing, they're the ones that really made it. And then it's funny, like beverages, Costco, Dollar General, Dollar Tree, grocery stores, utilities. So over the past year, safety. Over the past month, healthcare and aerospace and defense and a little bit of fast food restaurants. Over the past week, more places to hide. Over the past day, you pretty much did okay. If you're a day trader, that's fine. But if you're a long-term holder and you've been holding, let's say, for a year, you're suffering, right? Unless you were in oil and gas and you stayed. And the problem is, if you stayed in oil and gas over the past month, you lost a lot of your gains. And so, so far, I still have nothing for you. I don't know whether the market's going up or down today. I know there's recession fears. I know the market is like kind of trading in commodity weakness in copper and a little bit in silver and a tiny bit in oil, but it's not enough to move the needle. Plus, you've got your bond yields dropping, which is really positive for stocks. I don't know. This could be a head fake. This could be massive bets against the indice averages. We ran our model, and our model is interesting. Our model is rather bearish right now. So maybe we just switch gears. So none of this stuff really helped to figure out what was going on in the market. We had a few other things we wanted to look at. Top news. Koyfin is not known for having like a political position on things. Koyfin is just news, raw news. Future slide is recession fears, Trump tariff optimism. A Treasury yield curve flattens as on U.S. growth fears. Okay. Stuff we talked about. We look at the 10-year. It's interesting because earlier this morning, when it was mostly Europe trading, or early morning, you almost hit 3% in the 10-year, which is kind of where I expected. Well, right now it's down to it's under 2.9. Now the 1-month Treasury is staying right around 1.25. And the 30-year, 3.11, but also dropping. So it tells me that this morning, bets to basically crash the equities and boost bonds. So I'm trying to figure out what trade does that. Why would you crash equities and boost bonds this morning? I don't know. I don't know. There is some other data that's worth looking at, right? The COVID. COVID's peaking up. Hospitalizations, new hospitalizations, COVID hospitalizations, is up just about 5,000. I remember when we first started talking about it, it was like 4,400, 4,200. And new cases are around 110,000 now. Truthfully, it's hitting. People I know coming down with COVID. Their kids are coming down with COVID. COVID's still out there. 5,000 hospitalizations is still a pretty big number. And we show the trend over the past year, how it fluctuates. It rolls. I think hospitalizations is probably a better number to hit. Right? 3,000. So same time last year, we were at 2,000 new hospital cases. Now we're at 5. Then it fluctuates. It rolls up to 12. And it rolled up to a high of like 20,000. Then it came all the way down to 1,500, and now we're up triple to almost 5,000. So it's there. And then I was looking at Zero Hedge because this is a more exciting news source. Exciting meaning not independent, but exciting. Future slide is recession fears. Europe is staring into the abyss, credit protection exploding. So that tells me Deutsche Bank, Credit Suisse, UBS. They must have done something silly, right? Chillingly realistic path to rate cuts this year. Now that's interesting. Um, the dollar, fresh highs. Highland Park shooting. Now, for those of you who don't know, I live in Highland Park. We had plans to be right where the shooter was. We were going to be in the parade, not marching. Normally we march in a parade. Um, I'm a political person, right? So normally I'm in the parade, I'm marching with my political party. And so we're Republicans, by the way. Um, but this year we didn't make it. My daughter was tired and we just weren't feeling it. A little worried about COVID. Just not kind of trusted our gut on this one. It just didn't go. But normally we stand by Uncle Dan's, and that's where the shooter was. And so might not be here today if we had not trusted our instinct and gone. Scares me because now Highland Park, it's like a story. It's like Columbine or Uvalde. We are a story. This, I don't even know if it's the same guy. This guy got taken down, and yet there were still helicopters flying around our neighborhoods, still police sirens. We went out to the grocery store, big grocery store, and maybe there were 6 customers. There were only um, two checkout counters, checkout lines, and then they shut one of them because there weren't enough people. And so, shut our whole town down. I don't know if you guys have ever operated under a stay-at-home order, but we weren't allowed to leave our house. Like 3, 4 towns, because the shooter was at large. In fact, we saw a car that looked just like his parked just up the street from us for like 2 hours. I'm like, honey, I should go out there. I should take a look. And she's like, you're going to get shot in the face, Jeff. Don't do it. I didn't know what the car was supposed to look like. I only knew after the fact, after I saw the pictures, that, yeah, it was probably the same car sitting up by our pool. I didn't know. I thought maybe the guy went to the pool, right? Who knows? It's awful. So, just so you know, it's pretty traumatic when you have a mass shooting in your neighborhood within maybe 2 miles of our house. It's pretty scary. And in fact, this is like a kid. He's tiny. He's like a little kid. He's like, I could probably push him over with a finger, right? And he's all, oh, I'm a tough guy. But he's not. He's like a little skinny malink. And probably very politically active. He's probably like a woke kind of guy, all the right stuff. And whatever message he was trying to send, he sent the wrong message. He scared the hell out of a bunch of women and children. He's hurt people, killed people. That message is never, whatever message it was, you'd have been better off writing an article and put it on Medium. Maybe somebody would have read it. Maybe make a YouTube video. Go ahead. But don't do this weird stuff. It totally messes up life. It kills people. It hurts neighborhoods. Very stressful for us. We had a lot of family conversations, right, about this. So it's a bummer. It's a bummer it happened here. I can't believe it happened in our town. We're such a liberal town, too. We have the strongest gun control. I don't even think you're allowed to have a picture of a gun in this town. Right? I mean, just really tight. It's very liberal. I live in a very, very, very liberal place. And so, just never expected it. All right. What else do we have? No, I see not a lot of other news. So, there. And by the way, I talked about it. That's great. I wasn't sure I was going to. I got some other stuff to share with you. Let's get to it, right? Futures down more. It's almost like someone's watching, right? And they're like, hey, Europe's down. Oh, we're going to crash Europe. Look at that, down 1 point. Is that even right? Europe down 1.4%. Germany down 1.7%. World indices. Let's take a little look-see. Let's do it. Yeah, DAX is down 1.5. UK is down 1.5. The CAC, which is France, is down 1.5. The FTSE, which is also UK, is down. I think this is Spain. Euronext is down 1.2. What's interesting is the VIX is down, although this may be Friday's trading. But VIX is down. No, it looks like VIX is popping right back up. But VIX is down when the market's down. So China's down. China was down. India was down. Hang Seng was up. This is interesting. Who knows? We didn't sleep much last night, by the way. Big storms. So, I don't know. Very pessimistic out there. Look at that. Europe is down. Asia was down. All right. So, futures are down. Let's see. Did anything change with foreign exchange? 102.89. That's low. That's low. I want to talk to you about that, right? So, U.S. dollar tends to move opposite of the stock market. So the net here is when the dollar rises, the U.S. equity market tends to fall. That's just true, right? Yeah, we kind of covered everything. So what else is interesting? I got to share with you something interesting, because otherwise this is a big fat crap sandwich right here. Let's do it. Let's go proprietary. Everyone loves proprietary. This is our down run. Individual stocks from our down run. For those who bought our service before, some of these names are familiar. LWLG, no revenue, like a tech stock. Reg Cell, tightly controlled, out of China, hoodoo voodoo kind of medicine. Funware, it's like a tech stock, would know where to go. Indonesia Energy Corp, I think has 2 energy producing wells in Indonesia. Tiny little energy company with a really big market cap. That thing's been falling since we called it. I wish we would have shorted it. We didn't. Redbox Entertainment's being purchased. Quantum Computing Inc. I think still had very little, if any, revenue. Mullen is a meme stock. Big fat meme stock. Backed Holdings was a meme stock. Bunch of biotech, which totally risky. So when you look, most of the stocks... Oh, BBIG is a meme stock. Most of these stocks, Singularity is a meme stock. Revlon, memed. I have no idea what that did. Revlon's a meme stock. Arctic Quantum is a quantum security. I call it a meme stock. It's just weird. The business really isn't there yet. So you go through these and you have biotech, memes, and just super risky stuff that's probably going to go down really fast. Okay, so you would have this every day. I look at this and I think, where's the beef, Jeffrey? Could look at it this way. Let's take a look at some percentage values. This is one of the ways that we look at this data. There we go. It's like Lightwave Logic. It's so interesting. 9% expected return. Last day volume is 100% of the average, which is the average. The last day closing price is down 25%. You look at the stock and it's not moving. But it's a crazy stock. Moves all the time. Audi Biosciences only traded 4% of volume over last year. Longavron, 0%. Reg Cell, 1%. Funware, 4%. So these are illiquid, not trading. Thing could move. So like Funware is down 51% over last year. Indonesia Energy Corp, funny part, only down 32%. I think it's fallen in half since we started looking at it. 17% of daily volume. Redbox at 100% of average volume, right? Quantum computing is that. So the volumes are really low. So if you want to play around with some of these stocks, fine. Vinco Ventures, meme stock, only traded 36% of last year's average. Arcit, 15% of last year's average. These are thinly traded, highly risky stocks that you should avoid. July 1 and a day. You should avoid these stocks if you're an investor. If you're a trader, possibly very good shorts, could even be volatility plays. It's just interesting. Now we look at the up stocks. This is even more interesting. So what's happened in the market, probably important to give some context. So when we look, there's a couple things to share with you. There's interesting context in the market. So the S&P 500 variance continues to rise. It is below 1.60 times 10 to the negative 4. It's 1.57 times 10 to the negative 4, which is still historically pretty high, but not that crazy. By the way, if you have a question, go ahead, ask me anything. Chat away. I will incorporate into the video. I like to do that. It actually makes it more fun. So the S&P 500, excluding dividends, is down 10%. So dividend of 1.03, so you're pretty much down 9% for the year. The Russell, inclusive of dividends, is down about 24%. The NASDAQ is down about 19%. So, and the risk-free rate of return that we use is 1.5%. And the reason we use that number is for this reason. If you take a look at 1 month treasury bills, which you and I can buy on treasury.gov, you're going to get 1.228%. But of course, there's going to be banks that are going to give you a little better than that. And so that's a pretty good 1 month. I actually heard that inflation protected savings bonds are above 1.5%. And so, yeah, there could be some play there. So we start off with this context that says the S&P 500 is risky and all the indices are down. And then what we find is the best portfolios. So this is what you would pay for if you bought our model. These are our best portfolios that we found. The best, the least risky. So it's hard to read these, but it's not hard to understand the shape of the answers. So the best stock portfolio has a 1.28 times 10 to the negative 4 edge. That edge has been as high as 6 times 10 to the negative 4. So it's a tiny edge. And it takes you 15 stocks evenly held to get that edge. To get roughly speaking the same edge, statistically speaking, you're still at 1.2 times 10 to the negative 4, just rounded down. It's 24 stocks. And at one point, you can get all the way to 30 stocks. So what this says is it's 15 to 30 stocks evenly held to get just the tiniest edge over the S&P 500. So it's just not there. So what kind of stocks, Jeff? So AMD, BlackRock, Carlyle Group, Coinbase, Dillard's. I don't know Ebix. I don't know FTNT. I don't really know Mercado Libre. NVIDIA I know. B. Riley. SCU is a financial services firm. Surgery, SGRY, like Surgery Support Services. SI Time makes chips. SI, Silvergate Capital lends money to Bitcoin operators. And TTD is a internet advertiser. So you hold all those, you're going to hold an amazing amount of beta. You're going to have highly risky stocks that counteract each other and actually will outperform the market if, in fact, the market's going to go up. If the market goes down, it should still outperform the market over time because it should, over time, do better, right? It should outperform. You could say, Jeff, I'm a risk averse kind of guy. Give me the 30 stock portfolio. And there's other stocks that were added. These are all U.S. incorporated stocks with a positive beta, positive earnings, positive cash flow that traded every day, and other data validation. So 15 to 30 stocks. That's a lot. That's a lot of hedging, and it's a lot of counteracting each other. And the model took like a long time to run to get these. And so this is your answer. So then the next question would be, Jeff, 15 to 30 stocks, right? It's complicated. I'm a retail investor. I can't do it. That's fine. I want to buy one stock. What's interesting is the stocks that it's saying that are the best, generally speaking, these stocks are down over the year. These are not high performers. These are consolidated low performers or moderate performers. Well built, 2% expected return, right? 3 times the average volume on Friday than average over the year. Tiny market cap, 3.4 billion. So people flooding into well built. Where else are they flooding? P&M Resources, piece of risk averse stock investing. New Mexico's regulated utility. Crestwood Equity Partners. Right? That's a master limited partnership in oil and gas. Sanderson Farms. That's interesting. Anything else trade high? No, everything's pretty low in terms of volume. So let's do this. Let's say, all right, Jeffrey, where were the volume plays? Well, Omnicell, Stride, Sun Country Airlines, Fast Radius. Oh, Fast Radius because the stock had dropped a lot. So people probably bet it would come back. Kohl's, that's a downtrodden stock. They're selling themselves. CNA Financial, now that's interesting. CNA is a Chicago-based firm. It's probably worth a look for CNA. Columbia Banking System. Super Microcomputers, National Lead. SIGA, the monkeypox people. Franklin Covey. These are not the quality stocks with pricing power. This is weird. Okay, so that's what's trading on Friday. Then I don't understand. So let's take a look at maybe where are the stocks with the most with the prices that are the highest. So RCM Tech, okay, SIGA, which is monkeypox, PBF, which is a very risky energy company. Arch Resources, coal, I don't know. Not a lot of stocks with the prices up, which is interesting. You talk about like, oh, it's going to be a two-bagger. There's only one two-bagger in the whole thing. So then we got to look at maybe the top market cap. Where's the money flowing to, right? Top market cap. There's got to be a story here somewhere. Apple, Microsoft, Alphabet, Amazon, Tesla, Berkshire Hathaway, United Health Group, Johnson & Johnson, Meta Platform, Visa, Exxon, NVIDIA, Procter & Gamble, JP Morgan Chase, Walmart, MasterCard. With the exception of NVIDIA, because the number's too small, for the most part, all these companies have negative AOCI. So they have earnings that are negative, that are kind of buried into they're reflected in the balance sheet, but they're not present. You don't see them in the net income statement. All these companies have long-term debt, with the exception of Meta Platforms. That shows up as a no data found. Nice, sweet, positive cash flow. You can see Apple. Thousands, millions, $116 billion in positive cash flow from operations. It's crazy. Oof. Microsoft, $87 billion. Alphabet, $91 billion. Then very quickly it drops, right? Tesla's only 11.5 billion, right? So market cap of 788. That's like 70 times cash. And maybe 80 times net income. Funny for them is they don't really have AOCI. They don't really have that. Tiny common equity. So Tesla still has a lot of fluff, a lot of air in its valuations. Which is interesting. So, I mean, maybe you're curious, right? What are these 15? How are they going to do? I don't know that I'm not interested. I might be interested in like leptokurtic low variance. Leptokurtic and low variance shouldn't move very much. Platykurtic and high variance should move a lot. It should be very fun to trade if you like that kind of risky thing. Ooh, hang on. Quick update. Update on the markets. Jeffrey, let's go to the videotape. All right, live from Highland Park, Illinois. Let's take a look. So IWM, which is the Russell, at 169. SPY, the Spider, at 377. QQQ, 278. I'm going to watch that for a minute. We're going to take a look back at the futures, see what we find. Maybe they've changed, right? Who knows? Maybe they changed. I'm trying very hard not to show you any stocks that we own or that we have an interest in, because that's not what this is about. We're not pumping our own names. Can't do it. So if you look at the futures, they're down over 1%. So it's very red today. Yet the bonds are up. Look at that. 30-year bond is at 140. My guess, the 30-year bond is at 140. What's that yield? Under 3%? No, it's about 3.074. So that's crazy talk. That means long bond rates are like crashing. And I don't know why that would be. Short bond rates are also going down. Well, I don't know. Why are interest rates falling? I thought the Fed was supposed to be tightening. Maybe the Fed's not going to tighten. It just doesn't make any sense to me. Inflation, last we looked, was still really high, right? But so someone is betting, or some market forces are betting against interest rates, driving interest rates lower, driving equities lower, copper much lower, gasoline lower, crude's about the same. All right. It's just odd. It's just an odd thing to see. You know, we're going to turn the ad blocker off, or turn the ad blocker on this stuff. This is terrible. Where are we going to move over? FinViz. Yeah, there you go. Just to get a look at the visual while we're here waiting. And yeah, market's got an hour. I'm always fascinated by this. Market's got an hour to open. Here's the IWM, the QQQ, and the SPY. Take a look at some stocks like we talked about, like Tesla. Tesla's at 670 and 89 cents. KRE is regional banks. They're not really trading. Morgan Stanley, largest investment bank by market value. 75.51. JP Morgan, it's a bank. See how they're doing. Not a lot of excitement here. It's like watching paint dry. Trending tickers. Hang on, I know how to find this. I know where to find the good stuff, right? Let's go to our own proprietary models. So these are ones where we have an investment in, so be careful. So Corbis is down. KRE is down pre-market. We love Corbis. I don't know why Corbis is down. Corbis should be up. But it's not. The Walking Wounded. Rio Tinto is down this morning. Rewalk Robotics is down. We like Rewalk. We'd like to buy some Rewalk. We like Freeport McMoran too, but I think that's got a lot more to fall. Cleveland Cliffs is down this morning. BHP is down this morning. GrowGen is down. Hydrofarm, Coinbase. Hewlett Packard is down. Dell is down. AMC is down. Franklin. Nothing's up this morning. Okay, so let's take a look at all the regional banks. A lot of regional banks. We track a lot of regional banks. Deutsche Bank is down. UBS is down. Credit Suisse is down. Anybody up? Broadway Financial. Oh, yeah. I don't even know who they are. Probably worth a look. If we look at money managers, how are they doing pre-market? Yeah, they're down. B. Riley is up. B. Riley is one of the stocks that our model picked, and Sculptor Capital. So our model picked stocks that are not down this morning. That's helpful. Crypto and miners, pre-market. ArcelorMittal down almost 7%. Rio Tinto down 5%. Freeport Momo down 3.4%. Cleveland Cliffs 3.7%. The market is showing breadth lower. Chips and semis. Chips and semis are down, with the exception of TE Connectivity, which I believe is a local Illinois company. All right. Trucking and transport. Pre-market. Yeah, mostly down. Norfolk Southern, Heartland Express. So there's not... These are trucking, and CSX and Norfolk are trains. So they're up. So where are we at? Where are we at, right? If I go back to my holdings, again, pre-market, Corbis is down. Banks aren't really moving. Talked about the regional banks, mostly down. And to foreign banks that we're looking at now, Deutsche Bank, UBS, Credit Suisse. It's fascinating. They're down so much, right? Money managers again. Any movement there? Nope. They're down. Specialty retail. How was retail? So some guy said that there were some specific factors there, but Con is down 6%. They sell furniture. Q-Rate, they're the online folks. QVC channel. Turtles Place, Newell Brand, lots of negatives. Anything up? Yeah, Dillard's is up. Dillard's is one of the stocks that our model likes. So what's interesting is that the Chicago Quantum Net Score picks, so far from what we can tell, are up this morning. So smart money might be betting on the market to go up. So something to think about here, right? That's the kind of thing where I would expect like a Goldman probably runs the same model we run. And they're probably like, oh yeah, this whole market's crap. We're not putting our money in Apple.
right? Or they're looking at things like, what stock is down the most from last year? Well, fast radius. Let's jump in it, right? Look at that volume. I don't believe that investment banks do that. I believe what they do is they run a model and they try to figure out where's the edge, right? And so in this case, the edge, as we showed you, is 15 stocks. And my guess is that those 15 stocks are more or less up versus down today. That those are the picks today. That everyone forgot, right? They forgot that the market's supposed to be red today. And so they're putting money in where it would probably have a 2 to 3x multiplier on the gains of the market. Cannabis, tobacco, very much down. Very much down. Not a good day for cannabis or tobacco for the most part. So, all right. So market's down. Pre-market's down. Some of the stocks that we like Cleveland Cliffs, really far down pre-market. Freeport McMoran, right? Rewalk. Oh, Rewalk came back up. That's nice. Yeah, I like the story. The Rewalk story is for people with spinal injuries. It's a good story. Let's take a look at the S&P. Let's see how it's done over the past 5 days. Candle, we'll go 15-minute candles. And you can see that this morning, really starting at about 7 p.m. last night, it came down and up. So it was like a gentle little slope. Probably draw what I'm talking about here. Here's the problem, right? So let's do a freeform doodle. Thick. So the market decided to do one of these things, right? And generally speaking, it's a consolidating pattern. That's not a great pattern. If you look here, it's like a cup. Come on, give me a doodle. Look at the cup and a handle. Cup and a handle. And then take a big dump. So I'm not feeling good about the market. Not at all right now. In fact, this whole thing, if you go back like a couple of days, looks like a cup and a handle. I wouldn't be long this market right now. I would not be long. The only reason that we're still long some of the stocks is because we've held them so long, right? So, I don't know. Good luck out there today. Right? Still pretty red. Good luck. I don't know that I'm long this thing. I think I'm short the market, if anything. And market's down. Europe is down. Nikkei was down. VIX is up. I'm fascinated that bonds are up, though. To me, that's the story today. The story is why is fixed income up? Why are yields down? Why are people willing to take the risk? Right? Because the truth is, if you were to look at debt right now, I mean, I can look at agency debt. It doesn't help much, right? Even on the corporate stuff, this is not that helpful. This isn't right, actually. Maybe there's some news here. Maybe there's something here, right? If we look at kind of flattening, right? Economic data, flattening. Treasury yields. I don't know. I'm not with you on this. I don't think the market makes any sense today in terms of why Stocks are down because of recession fears. Bonds are up probably for the same reason, because of recession fears. So people are hiding out in bonds, driving the yields down. But that narrative doesn't sound right to me, because it's too much money. It takes too much money. It's $30 trillion in the markets, in the U.S. Treasury market. So, all right, so Tesla's down a little. Morgan Stanley's down. Morgan Stanley's actually not down. Morgan Stanley looks pretty good right now. I don't know why that wouldn't be in there. Bid ask. Bid ask. Orders, shares. Wow. It's a huge spread on Morgan Stanley. Even pre-market. It's just not trading. JP Morgan, are you trading? Bid ask. Yeah. 20 cent spread this morning. This is why you don't trade pre-market. Who wants to spend 20 cents trading JP Morgan pre-market? This is just a lot of hooey, right? Where's this one? Let's take a look. Tesla's trading 45 cents spread. Not a bad spread on such an expensive stock, right? So, hard to tell. Let's go back to the Spider, 376.84. Let's go back to QQQ, 278. Let's go to IWM, 169. Just again, not seeing a lot of movement. I think the net of the story is this. So let's summarize it up. Market breadth is still negative. The indices are still down. It's a low conviction day in the market, though. I'm not seeing a lot of conviction, a lot of focus. And I noticed a cup and handle, which is interesting because I don't put a lot of stock in these types of charts and pictures. It's interesting because, it makes a gradual back rise, but then it's coming down again. And so, it's possible that this thing falls through the floor, hits 37.50. Maybe that's what I'm calling today. I call 37.50. So I think it's going to be down. I think economically sensitive stocks are going to be what pull the market lower. Makes sense. Who wants to be in economically sensitive stocks? The only thing that doesn't make sense for us is why the bonds? Why are the bonds really moving here? Unless here's a perspective, right? So the euro dollar at 102.86. It's possible that European banks, European financial service companies, are parking their money in treasuries. The reason I say that, if you look at Deutsche Bank, I'm just going to try to build some patterns here. So I like Deutsche Bank. Deutsche Bank got its ass handed to it last economic crisis, because they didn't know how to manage risk, and so they invested in the subprimes and CDOs, and they just got killed, right? Almost went bankrupt. Of course, German government will bail them out. Nothing bad's going to happen. But UBS, Credit Suisse, these guys, they're susceptible to hedge fund risks and money managers blowing up and all that kind of stuff, right? So if you look at the stock, it's down. And so they probably want to delever. The problem is that if you delever into a 30-year bond that's yielding 3%, and the Federal Reserve decides to jack up rates by 3%, you're going to lose a ton of money. So whoever's putting money into treasury bonds is betting against the Federal Reserve Bank driving up market interest rates, The Fed could do whatever it wants with short-term money. 1 day, 1 hour, 1 minute, even if having an effect on 1 month treasuries. 1.25%, I mean, that could go to 2%. There's no question. But it's Mr. and Mrs. Market that drive the 30-year and the 10-year. And so we'll see what happens. All right, I want to thank you for watching. 7:50. You got time before the market opens. I got maybe some trades to make myself. I'm looking at everything. So if you like the video, do me a favor. Hit the red subscribe button. It doesn't cost you anything. It doesn't pay us anything. But it tells YouTube that you liked it. And it'll allow them, it makes them, their algorithms, to share the video as a suggested video to others. So you can get notifications when we're on. Plus, it says to others, the guy's got a lot of viewers. People seem to like it. The other thing is leave a comment below. I like to type back if you drop a comment. I'm very supportive of that. And then if you don't want to track us there and you want to communicate with us more like real time, come to Twitter. Chicago_Quantum. We right now, for the next week, for the next 10 days, have a 50% off coupon on our website. So if you want to buy a run, if you want to buy a service, all of our products and services are 50% off for the next 10 days. So you have a pretty good chance of buying a run, getting the analysis, which I believe is a steal at $7.50, but you can get it for $3.75. It's pretty good. It's a pretty good deal. And the way you do that, so we showed you the Twitter, is you just type Chicago Quantum, www.chicagoquantum.com. Take a look. We're a consulting firm. We just updated, by the way, our brochure. Our brochure was updated June 29th. Very important to read the brochure because this explains all your costs, terms and conditions, what exactly you get for our services so that you can make an informed decision. So we are a non-discretionary investment advisor. We don't invest your money for a fee. We give advice and we provide quantitative and in some cases fundamental analysis on stocks so that you can make better trades, so that you can get the 15 to 30 stocks that you can hold and make a ton of money and beat the S&P 500. That's our model. That's our game. So that's what we do. So good luck out there. Have a great day. I'm going to leave you with the futures picture again. And yes, thank you, FinViz. You're great. So, yeah, markets look like they're going to be down. U.S. equity is down 1% or more this morning. VIX is up 4%. Bonds are up through the roof. A lot of strength in bonds. And the dollar is really strong. The dollar is doing great, which means we're going to import a lot more. We're going to export a lot less. We're going to bankroll and support the rest of the world's economies. So it's not a bad place to be. It's nice to be rich, right? We can do that. So, all right, take care. Bye-bye now.